Hello and welcome back to the OBR YouTube channel for the top stocks to watch for the first week of September. In this week, it is the first week of the month, so we are going to have some macroeconomic data that we need to keep an eye on in this upcoming week. So let's get right into this video. Starting off the week, Tuesday at 10 a.m. Eastern Standard Time, we have consumer confidence numbers and JOLTS job openings. Wednesday, 8:15 a.m. Eastern Standard Time, we have ADP non-farm employment change. Thursday, ISM manufacturing PMI. Friday, 8:30 a.m. average hourly earnings, NFP, and the unemployment rate. So quite a bit of news events this week, which is okay because last week we didn't have a whole lot besides for that Fed speech. So just being aware of some fundamental news during market hours. We have Tuesday 10 a.m. and Thursday 10 a.m. Besides that, everything else is happening in pre-market. As you can see on screen right now is our earnings in the S&P 500 for this upcoming week as well. Moving over into our technicals for the week, we are going to start off the week looking at SPY as we normally do. And I must say the situation for SPY does not look too good right now. We've recently bounced off of the 200 daily moving average, which is something I went over in last week's top stocks to watch. This is significant because we saw a very eerily similar pattern play out in 2008. So we need to keep a very close eye on this. There is historical backtesting data for this to see a bounce and a move lower, and potentially even new lows. So definitely keeping an eye on that 200 daily moving average on the 4-hour chart and the daily. We also just broke out of a reversal pattern, which is commonly referred to as a head and shoulders pattern. This price pattern, most of the time, I believe it's around a 72 to 75% of the time, does indicate that we will be moving lower. So if we're going based off of the head and shoulders for take profits this week for SPY, we can be looking around the 398.70 range. So besides that, going to be keeping an eye to just watch puts really for SPY, looking to play to the downside, continuation off of this impulse wave. Apple's going to be a very similar situation. We saw a very similar head and shoulders pattern play out, as you can see here. Here's our neckline. Just broke out of this head and shoulders pattern. We could be coming back down to anchored VWAP from our all-time highs, which is this blue line I have drawn here. And that is a very realistic price target for this week of 161. That is if we decide to slow down our pace from what we've seen last week, which, as you guys can see, we were moving to the downside quite quickly in this last week. This is a 4-hour chart. So we're definitely going to be looking for some continuation to the downside after Friday, potentially a bit of a retracement, but overall, SPY and Apple are looking quite bearish. QQQ looks very similar right now. Not as much of the head and shoulders pattern that we saw play out on SPY and Apple, but still bearish regardless, making new lows, breaking down, showcasing that we are in an impulse wave to the downside since we broke this low here around 313. So for QQQ, I'm also going to be looking bearish, looking for a move back down to 303. Moving over into Tesla, Tesla does look quite bullish compared to the other names that we were talking about so far. So what I'm going to be looking for is this wedge to play out that I have highlighted here. If this wedge does break out to the upside, that will be quite bullish, but if we do break out to the downside, this could also yield a reversal alongside everything else that we've been looking at so far. So definitely going to be keeping a close eye on Tesla. We could retest this zone now that we've broken out and continue this move to the downside, or perhaps we come back into this zone, fake out, and continue to move higher. So either way, we can play Tesla, but I think that right now it's definitely favoring the bears. Exxon and Oxy present quite unique shorting opportunities when reaching some significant resistance in this last week. So Exxon is still around that level. We were approaching this resistance of 99, about $100, and as you can see, we've been bouncing off of it ever since. So I'm looking for a break of this support for a continuation of the downside, which would be a similar head and shoulders pattern than we saw play out. I'm actually going to set an alert for this right now. But I quite like this pattern. I'm looking at this oil shorts on, again, Exxon and Oxy. Oxy recently approached some significant resistance as well and is making a very similar pattern. So should oil continue this move lower, then I think that these plays definitely make sense. We've been looking at playing oil shorts the last couple of weeks, so this could be our opportunity to get into those now. Definitely keeping a very close eye on Exxon and Oxy for puts, mainly WTI as well to kind of keep a track of those. Taking a look at our chart of the week, we're moving over to NEO. NEO has been consolidating for quite a bit of time, as you can see on the daily chart, moving down in this corrective pattern. I do believe NEO is poised for an explosive move to the upside once we break out of this resistance, but until then, we're going to just pretty much let this play out. It could come back down to test the bottom of this channel, or we could break out shortly. Again, I'm thinking that we're going to have a strong breakout of NEO once we could get above $21, so that's what I'm looking at this week. I hope you guys enjoyed and were able to take something from this video, whether it was a technical analysis setup that you liked, or it was just the macroeconomic data that you need to be aware of moving into this week, especially for, again, Tuesday and Thursday during market hours. If you guys enjoyed, please leave a like and subscribe. We all greatly appreciate it at OBR Investing. And as always, happy trading. I will see you in the next video.